Peter Elston joins us, Head of Asia Pacific Strategy and Asset Allocation at Aberdeen Asset Management. Aberdeen is an important player in India. They've got about $9 billion invested in Indian equities directly, and at this juncture it is important to get their India approach. Peter, good morning and thank you for joining us. Peter, straight off, you've been overweight on India, you like India. Given the way our rupee has moved and what could happen to Indian economy in the short term, are you worried about your India exposure?
Well, we're thinking about increasing it. You know, these periods of volatility are ones that are most of the time very hard to anticipate. But the key, I think, to investing is to make sure that you take advantage of these opportunities that the volatility presents, and that means finding the right time to start buying. Now, I don't know exactly when that time is. I'm pretty sure that our equity team hasn't actually yet started to increase weightings, but I know that our fund managers in the global team, our global equity team, they're getting interested not just in India but a few of these other emerging markets that have shown sharp declines. So the answer is yes, we are thinking about changing, and we're thinking about increasing it.
Peter, hi, morning. So are you seeing any redemption pressure considering the kind of volatility and weakness that we're currently seeing in Indian markets?
Yes, to some extent we are, which is, obviously what you would expect. What I, would say is that with respect to our, investment process, we make it very clear to clients that we are long-term investors. They shouldn't really worry about short-term performance because we don't worry about short-term performance. And because we explain that to clients, they tend to, be able to sit through these periods of volatility. One thing I would say is this. There's a lot of ignorant money that has been flowing into India over the last 3 or 4 years. And what do I mean by ignorant money? I mean money that is flowing into India via ETFs. Now, ETFs are a very ignorant way to invest because you're investing in everything. You're investing in the good companies, you're investing in the bad companies. It's, frankly, we think, a very flawed way of investing. It's a very cowardly way of investing.
Pardon me, got to interrupt you there. It is 68.40 for rupee now. So forget about 68. Now it's going closer to 69. You just want to pause up for a minute and think that, is this real? Yes, it is real. 68.3. There's nothing wrong with the number. That's the rupee fall for you. It has fallen 3%. That makes it about 8.5% for this week. This week, 2.5 days, the intensity of sell-off is absolutely gut-wrenching. 68.45 and still no recovery in sight whatsoever. So mark the intraday graph of rupee with the Sensex and or with the Nifty. It's really the rupee which is creating havoc in for benchmark indices and for the bank Nifty. Peter, you have a large exposure to banks. ICICI Bank, IndusInd Bank, Axis Bank. Are you now worried about your position there, and do you think banks have lost their safe haven status?
Oh, crikey, I'm not even... I don't think they ever had safe haven status. I mean, perhaps relative to the state-owned banks, they would be considered relatively safe in some respects. But look, no bank is a safe haven. Banks are sort of fundamentally bankrupt institutions because of this mismatch between sort of lending long and borrowing short. I mean, the entire sort of thesis for a bank relies on confidence. And if that confidence is broken, then banks can get into a lot of trouble. But look, all banks are subject to this monetary policy cycle. All banks are subject to this bad debt cycle that you'll get in any country. we're not trying to, finesse things. We're not trying to play that bad debt cycle. We accept the fact that our banks sometimes are going to have their margins squeezed either by what's happening on the monetary policy front or by what's happening on the provisioning front.
Peter, it seems you are in no mood to reduce positions in Indian equities, are you?
Absolutely right. We're not. With the benefit of hindsight, we might have reduced the weighting a little bit more on the basis that we were, I suppose, getting more and more noises from our companies that the sort of the growth picture was changing, but then that was probably the case for other countries as well around the region. So, one always has to look at this in a relative context. But yes, to be clear, we are still very bullish on India in the long term. India has a fantastic investment case. It's still pretty close to the very beginning of its growth trajectory. GDP per capita is still very low. It has a sort of vibrant democracy, which looks messy from the outside, but I think is, at the end of the day, the most effective way of getting the politicians to do what's necessary. In the near term, I think the politics is going to be a bit of a mess because, we're a year away from the election, and I suspect that any sort of changes, any proposals that get put forward are going to be populist policies rather than policies that are going to be, improving India's long-term competitiveness. But
right, Peter.